maybe the dog days of summer for some investors, but my next guest says we are at an inflection point for the markets, and what happens now could set the tone for the fall. We're joined by Rick Bensignor, Chief Market Strategist for Execution Noble. Rick previously working as the Chief Technical Strategist at Morgan Stanley. He is also the author of New Thinking in Technical Analysis, Trading Models from the Masters. Rick, good to have you with us on Bloomberg.
Thank you.
What is this inflection? I mean, it's a fabulous word, but I mean, I thought maybe we'd hold up a sign, you know, you're Mr. Inflection. What does this mean, you're an inflection?
I think we are at a critical place in the market since the March 2009 low was made. The market went from, in S&P terms, 666 up to about 1220. We then pulled back. We had the flash crash. We got back up over 1100. We've now sold back somewhere now 1050. Looking at both counter trend models, which are close to calling a potential bottom within a couple of percent from here, versus a simple, let's say, technical approach of drawing trend lines off of that March 2009 low. We're now on the third trend line off of that same low, and it's about to be broken. Typically, things come in threes. Three's a charm. In this case, three could be a very unshiny charm. And if you look at just classical technical analysis, when you break a trend line from the same starting point that you've redrawn three times, that's typically the end of the up move. So we potentially have a 100 to 150 point S&P point decline coming. At the same time, counter trend models say we're very close to a bottom. So this is why I think probably within the next couple of weeks, we're going to have a very clear indication if we're going to sell off significantly or if buyers really show up. Because if they're going to come in, Pimm, now and kind of within a couple percent of where we're trading is the time and place they need to come in order to hold this market up.
All right, but you talk about this trend line and this idea that, you know, great things come in threes. What happens if it doesn't pan out? Can we go out and buy another trend line and stick it on the chart? I mean, doesn't that call into question the whole idea of using this stuff in the first place?
Well, at some point, a trend break. So off of the March 09 low, which was clearly the most significant low we've seen in a very long time, we had a very steep rally and the market pulled back and then rallied again. So from that trough point, we drew the first line. At some point, many months ago, that broke. We then made another low and then moved higher, so we drew a second trend line. We're now at the point that from, I guess, probably the flash crash low or the actual 2010 lows versus the March 2009 lows, draw a trend line from there, and we're right at it, roughly at 1050, 1055 in the S&P. If Friday we close under 1055-ish or so, I don't care if it's a little bit, if we close 10, 20, 30 points beneath it, then we probably have broken the bulls' attempt to really hold this market up. I think it's likely the onus is on the bulls to show what they have right now. It's not on the bears to push the market lower. It's for the bulls to hold the market up.
So what's the likelihood that the bulls come back from vacation and after Labor Day they start bidding up the market? Because, I mean, we talk about volume all the time. Yeah. There's very little action in the market right now.
Completely very little action at all. So we don't care that much what's really happening. But what's the likelihood they come back? Earnings season is mostly over. You really don't have a catalyst now of major proportion until the elections in November. So you still might have a little back and forth and push and pull and game playing. But in the bigger picture, it's kind of like time and place for the bulls to really show that this market has what some fundamental analysts say, which is 20% upside from here.
All right, so we got to watch the inflection point.
Correct.
All right, we're going to use that big word. We're going to call you Mr. Inflection, all right, from now on.